Will the crypto bull market be over in the next 30 days? Well, anyone who believes in the 4-year cycle is going to tell you that somewhere in the next 30 to potentially up to 60 days, we could very well see the top of the markets. And while I actually do agree with them that I think there will be a top, the bigger question is, will we see a prolonged year-long bear market where Bitcoin falls 50, 60, maybe 70% down again and altcoins get obliterated 80 to 90%? That is where I completely disagree. And in this video, I'm going to tell you why I believe personally the 4-year cycle is dead. This isn't a new opinion. I've had it for more than a year, but I want to go in depth with you and show you 5 reasons that the 4-year cycle is dead and will not repeat. And while I do think potentially taking profit sometime in October could be wise for short-term profit to buy the dip once again, I do believe 2026 will see another new all-time high for Bitcoin and altcoins. Make sure to watch this video all the way until the end. And of course, leave a comment down below. Whether you agree with me or disagree with me, I love hearing your guys' opinions. Let's get some healthy conservative debate in the chat. But in this video, the one I'm shooting, I'm going to tell you why I believe 4-year cycle is dead. Also, if you enjoy the video, make sure you smash that like button and are subscribed to the channel so you can learn more about how to make money. Whether we go up here or whether we correct the next 30 days, learn how to make money with our channel here, the Tim Warren channel. Make sure you're subscribed. With that said, though, let's get into the details, the 5 reasons that I think the 4-year cycle is dead and gone, starting off with point number 1. The halving event is no longer significant. Now, if you're brand new to crypto, you might even be saying, Tim, maybe slow down for a second and tell me what is the 4-year cycle? The 4-year cycle is a theory created by crypto enthusiasts based off of the last 2 bull market trends that are separated, it seems like clockwork, by a 4-year calendar. Technically, it's actually 3 years, 11 months, but that's so picky. We call it the 4-year cycle because it sounds a lot better than 3-year, 11-month cycle. This cycle is really dependent upon the Bitcoin halving cycle, which every 4 years, the block rewards for Bitcoin get slashed in half. But at this point, I'm going to make the argument that the halving event will no longer be significant. Let's make sure we understand what's going on with the significance of the 4-year cycle and the halving event. Between 2009 and actually 2012, the first halving cycle, Bitcoin rewards were 50 Bitcoin per block that were mined. That means that anyone mining at this time for very little money in electricity could gain a massive amount of Bitcoin. Now, again, Bitcoin was really not that expensive at this time, so 50 Bitcoin wasn't going to buy you a whole lot back then. Of course, today, if you could get 50 Bitcoin in 1 block mined, you would be an immediate multi-millionaire. But in 2012, when the first halving event happened, this cut the rewards from 50 to 25. A pretty big jump to fall down that far, losing 25 Bitcoin per reward. But that's still a lot of Bitcoin per block, so this is still a very fascinating concept to mine Bitcoin and make a lot of money. In 2016, the blocks halved once again, cutting from 25 down to 12.5. In 2020, we went down to 6.25, and in the most recent halving event in 2024, we're now sitting down at 3.125. Of course, as you keep halving the rewards, the cut becomes less significant every single time. 50 to 25, 25 to 12.5, even 12.5 to 6.25, these are all pretty major jumps. But the most recent one only dropping from 6.25 to 3.125, it's really not as big of a deal. Every single halving event, you get less and less rewards, and mining becomes more and more expensive, causing this significance to no longer play a major role in creating a 4-year cycle. Miners in the past did the math to understand, hey, this is the right time, depending on the 4-year cycle, to hold the Bitcoin rewards, but there's going to be a right time to sell and take profit when the next split comes and things become more expensive for us. We got to sell off, take some profit, and prepare for more expensive mining. At this point, guys, we have 19.91 million Bitcoin in circulation, and we will have another 100 years to mine the last 1.1 million tokens. This simply will not be a significant point of interest going forward, and therefore, for that point alone, the 4-year cycle is so tied to the significance of halving events. If halving events aren't significant, neither will a 4-year cycle be. The other point about this is ultimately, while miners were the ones controlling the 4-year cycle in the Bitcoin markets, with institutional interest now coming in, it's no longer the miners determining when's the best time to buy and sell. It will be the large companies, the whales, and the institutions. But if that argument's not good enough for you, let's get into argument number 2, that the 4-year cycle is dead. The timing of the 4-year cycle has been completely off since the bottom of the more recent bear market at the end of 2022. For one thing, when it comes to the 4-year cycle, never have we ever seen Bitcoin hit a new all-time high before the halving event. Well, that changed in 2023 when Bitcoin ETFs and institutions drove us all the way up to new all-time highs a month before the halving event. Now, that was pretty minor, but it's just the first domino in the falling cascade of failing to meet the timelines of the 4-year cycle. Another factor that's involved in the 4-year cycle is what we call the altcoin season, when dominance seems to shift from Bitcoin into the altcoin space. Now, to show you more about this, let's go back and look at the history of 4-year cycles and the timelines of when things seem to happen. On this chart, you'll see that the green lines represent the highs from November of 2013, December of 2017, and November of 2021. The red lines represent the bear market bottoms in January of 2015, in December of 2018, and in October of 2022. And the white lines signal the beginning of altcoin seasons in February of 2017 and also January of 2021. Starting off, you can see when we have an official top, according to 4-year cycle, we see roughly 60 weeks between the tops and bottoms, which means bear markets last just a little bit over or around a year. In this case, here in 2018, we saw about 53 weeks. And then here in 2021, 2022, we saw roughly 56 weeks. While they weren't identical, they were in very similar ranges, meaning there was significance to this 4-year cycle that you're seeing roughly a 1-year bear market happening. After this, though, we saw a continuation of where the bear market bottom to the altcoin season was somewhere in the world of 110 days. 111 back here in February 2017, and once again about 109 over here in December of 2020. So you can see the significance of where people are getting the 4-year cycle. Even after this, we can see after altcoin season, the bull market would continue roughly another 40 weeks into the top of the bull market, and the cycle would repeat all over again. While we did see a year-long bear market between 2021 and 2022, the similarities have stopped ever since. While there's some consideration that an altcoin season might be starting right now as I'm making this video, we should have hit altcoin season far before today. If the 4-year cycle was intact, altcoin season should have started 110 weeks somewhere in November or December of 2024. If altcoin season was starting today, that would mean we still have 40 weeks till the top of the bull market, putting the top in the summer of 2026. In a nutshell, while the 4-year cycle was good for 2 different seasons, we've already obliterated it since the lows back in 2022. And the reality is that this is just a faulty reason in the first place. I've said this on the channel several times, but if you're newer, let me walk you through it. Like we said, between 2013 to 2017, then on into 2021, we saw consistency within a 4-year cycle theory. But let's make sure we understand what theories and established laws should look like. The first time something happens and the markets are separated by 4 years, that's just a thing. There's no pattern, there's no rhythm. It's just tracking something that happened. The second time something happens, while that's really cool, it's merely a coincidence. You don't have a law and order. You have to see something happen a third time to say this is actually a valid theory and is repeatable to be used. But like I just showed you, we've only had 2 successful 4-year cycles, and already the cycle has been broken as we've been playing out for the last couple of years. Now, at this point, I feel like I've made a really good argument as to why the 4-year cycle should be considered dead. But in case you're not convinced just yet, make sure right now, smash the like button because it's time to move to argument number 3. The 4-year cycle is not officially established. I actually kind of made this argument at the end of last point, but even more so, let's look at some other big details that applied to when the bear markets happened back in 2018 and in 2022. Yes, coincidentally, those bear markets were 4 years apart, but both bear markets actually also happened in the stock market due to economic uncertainty. Back in 2018, while prices of crypto and stocks had been flying, Donald Trump brought in some tariffs that caused confusion. Both crypto and the stock markets began to fall. Why? Because we weren't certain that the economy would be able to withstand all of the uncertainty. Of course, in 2022, with inflation shooting to high levels we hadn't seen in years, the Fed began to raise interest rates, bringing more economic uncertainty, and Bitcoin, along with the stock market, plummeted. The reality is, while a lot of people want to simply rely on the simplicity of a 4-year cycle, crypto does not do well during patterns of economic uncertainty. And guess what we've just gotten through here in the year 2025? A whole long year of economic uncertainty. But during that time, Bitcoin continued to rally. Yes, the altcoins pulled back, but they didn't pull back in order with the 4-year cycle. What does that mean? Was it actually a 4-year cycle causing crypto to decide when to buy and when to sell? Or was it simply the economy dictating when the best times were? I'm going to go with the latter. And what I'm seeing in the future is that a lot of the uncertainty about tariffs and inflation are now sitting behind us. A very bright future looks to be ahead of us into 2026. And it's one more reason why the top of this market will not be in September to November of 2025. Now, I'm just piling on, but let's keep going with a couple more points as to why I think the 4-year cycle's dead. Reason number 4 is that crypto, now that it is in the hands of the institutions, will no longer be driven by retail investors. It'll be driven by the institutions and the future of technology. Let's be honest, between the dates of 2009 and even all the way up to 2017, Bitcoin, along with altcoins, was a laughingstock. That was that weird coin that only nerdy computer geeks used and was never considered to be legitimate. Between 2017 and 2022, the institutions, though, started to see a threat to their dominance. And they used this time to heavily FUD and create fear about the crypto space, manipulating price to the downside. The only people who were willing to take the risk on cryptocurrency were individual retail investors like you and me. While there is a lot of money that's been poured in, that money comes nowhere close to the trillions of dollars coming from institutional buyers. However, those parties are now starting to jump on ship. They're no longer fighting to prevent Bitcoin and crypto. They're actually looking for ways to bring it into their businesses and adapt for the future. So no longer do the crypto bros like you and me decide 4-year cycles are the times to buy and sell. It's the big boys, the institutions, the whales. They decide when something is overvalued and it's time to sell, or when something's undervalued and it's time to buy. Even though crypto has been around now for over 16 years, we are still early. We have not used crypto for the fullest amount of what we're going to be using it for in the future. It's like investing into the cell phone business or internet way back in the 80s and 90s. 4-year cycles won't have any impact on that whatsoever. But now I want to move into argument number 5, specifically talking about why this fall will not be the top, but there will be a trap set in place that you need to be prepared for. Now, there's a theory in trading called the Composite Man theory, and it's all based upon looking at manipulation from large players in the institutional realm. The companies like BlackRock and JP Morgan and Morgan Stanley are large institutions that own massive amounts of wealth and news and social media outlets all around the globe. They control people like puppets by posting articles and opinions and pushing sentiment at just the right times to make you look the wrong direction. When they think something is worth buying, they will make sure that the news makes you feel like it's time to sell. And when they think it's time to sell, they'll make sure the news makes you feel like it's time to buy. As we talked about earlier, Bitcoin only has 1.1 million tokens left to be minted. And we have over 100 years for that to happen. The demand for Bitcoin is climbing sky high, but the supply is simply not growing at a pace to match it. That means it's going to be increasingly harder for the institutions and Composite Man to buy Bitcoin away from retail investors unless they can come up with a way to convince you to sell. What better way than to allow you to make your own mistake and assume that the 4-year cycle is still intact? People have been holding Bitcoin for a very long time, but if you're convinced that September is going to be the top of the market and it's time for you to sell and take profit, what an amazing opportunity for the Composite Man to allow you to continue to think that, only so they can buy up that supply at still relatively cheap prices before the next major run. Now, I want to be clear. I'm not saying there won't be a pullback that happens this fall. In fact, I think we could see another local top similar to what we saw in January of 2025 or March, April of 2024. We might even see several months of a pullback where Bitcoin retraces 20 to 30% and altcoins maybe 50 to 60%. So as both a long-term and short-term trader, I will look to take profits this fall. The difference is if I thought it was the bull market top, I'd be taking profits and holding cash for a long time. Instead, the profits that I'm going to be taking this fall will not be my entire portfolio, and they'll only be to get some dry powder so that I can buy those 20 to 30% dips in just a couple of months. This will be the pattern that the Composite man uses. They will allow you to sell and even feel comfortable for a month or two, thinking that you timed the top of the bull market perfectly. But while you're sitting there counting up your US dollars, they'll be buying the dips like crazy. Why? Because whether Bitcoin makes it to 140 or 150, or hey, maybe Bitcoin makes it to 200,000 by the fall, that's nowhere close to where it's going to be in the next 5 to 10 years. And the Composite man is more than willing to wait for those high prices, but they need an excuse to buy the supply from the retail investors that have been holding it now for 4 years. Now listen, I am not a financial advisor and I don't claim to be the foremost expert in the crypto space. There are so many great minds out there that you need to continue to listen to and use to inform your own opinion about the markets. Maybe I'm wrong. Maybe the bull market does top out in September. Last week I shot a video where I explained a lot of reasons why I don't think that's going to happen. And today I'm explaining to you why I think the 4-year cycle is dead and over. But ultimately, it's not about what I think. It's about what you think. Continue to do your own research to make those decisions for yourself. Even in this video, don't just blindly follow and listen to me, but hopefully you listen to what I said here and it allows you to continue to think for yourself and use these as arguments so that you know what you want to do with your money. If you have no idea where to even begin in learning more about crypto and investing, I highly encourage you to check out the Tim Warren Trading Group in the link down below. Every single day, we not only have live trading sessions, we have an academy that teaches you technical analysis. We have options for you to get one-on-ones where you can learn more about risk management and investing from some experts in our space. Yes, I'm the face of the channel, and yes, I'm in the Discord, but there's so many other people in there that are probably even smarter than me that will help you set yourself up for success over the long haul. So go give it a try right now, and I'll see you over there. The rest of you, make sure to smash that like button and subscribe to the channel and leave a comment down below after watching the video. What are your thoughts? I'll see you in the next one. Adios.